Okay, so Warren Buffett has recently invested $6 billion in Japan. As I often say to you, I'm someone who has made a lot of mistakes with my investments. In fact, I've made just about every mistake you could possibly make. But one thing I've always found that has helped me to learn and really try to avoid future mistakes is to follow the world's best investors and see what they're doing with their money. Well, Warren Buffett is one of the great investors. So when we hear that he's recently invested $6 billion in the Japanese market, this is something we should all be looking at closely and asking ourselves a couple of questions. Is there something here that we can learn from? And number two, maybe there's an interesting opportunity for our own investments. So I've been researching this news since it came out a couple of weeks ago, and in this video I'm going to share my research with you. As you know, I'm not a financial advisor, and this isn't financial advice. I'm just a regular guy researching this stuff to really try to get my own head around things, and then just sharing that personal research with you. Okay, so let's get straight into it. So Buffett has recently announced that he has been investing in Japan to the tune of $6 billion. Let's begin with where. Where has he been investing his money? Is it in Toyota? Is it in Sony or another company? Well, no, he has invested in 5 of Japan's largest trading houses, specifically taking a 5% stake in each of Mitsubishi, Mitsui, Sumitomo, Itochi, and Marubeni. But what exactly does that mean? What are trading houses? Well, Japan's trading houses are essentially investors themselves. They have large portfolios of all of their different investments. Their interests extend worldwide, from snowboards, silk scarves, and souvenir banana cakes to hydroelectric mega projects, chemical plants, and oil exploration. Through their involvement in every sector via thousands of subsidiaries and affiliates, they are the backbone of the Japanese economy. So basically they invest into just about anything that makes money, covering just about every sector possible, meaning they really hold a very diverse mix of Japanese related investments. So for me, what I'm really seeing here is that by investing in these trading houses, Buffett has a very diversified route into Japan as an investor. As a result, the first thing that really comes to mind for me is that Buffett is betting on Japan with this investment. He's not just picking out a specific Japanese company that maybe has a competitive advantage. He's really betting on the country as a whole succeeding. And this is not something we've really seen for Japan in recent times. As noted, flows in and out of Japanese stocks over the past couple of decades are frustratingly uncorrelated with profits. Japan's 3Ds, deflation, demographics, i.e. the aging population, and debt have made it, for many global portfolio managers, the place that they can afford to ignore. In fact, if we take a look at Japan's stock market since 1991, we can see it has been, well, very up and down. You can't really see a clear positive trend over the past 29 years. This, coupled with, again, deflation, an aging population, and high levels of debt, have largely put off investors. Whereas if we contrast this with the US, for example, we can see a clear positive trend over the course of many years. So what does this mean for us? Well, Japan hasn't exactly been the place that investors have looked to over the past couple of decades. However, according to some, this is now changing, as Japan, long an investment manager's graveyard, has become one of the most fertile markets for hedge fund managers in 2020, and it is no surprise to see Warren Buffett placing a big bet on the country. That's the view of Patrick Garley, co-founder of hedge fund consultancy Sussex Partners, a London-based firm that advises large investors on allocating to hedge funds. In some senses, Japan is the last fundamental trade. US markets, for example, have become somewhat divorced from the realities of the underlying economy. However, Japan still offers some great fundamental stories. So we know that the US stock market, well, let's just say it doesn't really make a lot of sense. I mean, it's higher today than it was at the start of this year. And I can't tell you what's going to happen tomorrow, next week, or even next month. But I can tell you that, in my opinion at least, I don't think that it makes for much sense for US companies to be valued higher today when the future is more uncertain than it's ever been than they were just at the start of this year when everything looked a lot better than it does now. Now, of course, we've gone into detail in how previous videos about how the Fed's interventions have really bloated the market and led to this, so I'm not going to cover those points again today. But the point here really is that the US stock market is beginning to look somewhat inflated to many top investors. But at the same time, the Japanese stock market looks relatively cheap in comparison. So maybe it's time to pile into the Japanese stock market, right? Well, not quite. The reason that Japanese stocks have been quite cheap compared to how much money that they really make is because people have been less optimistic about the future of Japanese companies compared with the likes of US companies. But at a time when US stocks have already climbed so high, this is when investors could turn to other countries in search of value. And that's exactly what Warren Buffett did. Now, before we go any further, I just want to make it clear at this point that the US stock market is the largest globally and has grown tremendously over the past 100 years, with remarkable consistency too. So in my opinion, even though I do talk at times about how the US stock market looks pretty inflated, and I don't think there's many people that would disagree with that, it is still one of the safest and most reliable of all of the stock markets out there. But let's go back to Japan and let's take a deeper look, because according to John Vail, the chief global strategist at Nikko Asset Management, Japan is a value play, but that's also coupled with long-term structural improvements in corporate governance, operational gearing to a global economic upswing, and extreme political stability. Japan's benchmark index, the TOPEX, trades for just under 15 times earnings in the Japanese fiscal year ending in March 2022, compared with a price to earnings ratio of about 21 for the S&P 500. So that's 15 for Japan and 21 for America, obviously with the lower number being better if all things else were the same. The TOPIX yields 2.4% versus a lower value of 1.7% for the S&P 500 and trades for just 1.2 times book versus 3.9 times for the S&P 500. So purely based on numbers, the Japanese market looks much better value than the US stock market. However, while the overall market is inexpensive, better Japanese companies do trade for loftier valuations, reflecting in part Japan's ultra-low interest rates. When you look at Japan, they don't have anywhere near the kind of technology industry that the US do. But to be fair, just about no country really does. Japanese companies are also generally smaller in size. In fact, only 4 companies in Japan have market values above $100 billion, while the US has about 65. However, what Japan possesses instead is a group of high-quality industrial businesses. In many ways, Japan is more like Germany than the US. There aren't too many internet companies, but Japan has highly competitive manufacturing businesses. So, I don't know about you, but when I think of a technology company, like many of those in the US, I tend to think relatively low profits, but very high valuations, certainly in recent years at least. Some companies aren't even making profits, but have crazy high valuations. And as a result, I tend to think high volatility, which of course can be great in the good times, as it means higher rises. But it can also be more risky in the bad times with more significant drops. In fact, we've already seen this over the past couple of weeks, with the tech-focused Nasdaq posting huge gains and equally large losses. When I think of manufacturing, however, take traditional car manufacturers for example, I think maybe lower potential, but also lower volatility. In a bull market, they're probably not going to gain as much, but in a bear market, they probably won't lose as much either, as their valuation tends to trade in a pretty reasonable band based on their earnings. So, let's answer the question. Why has Warren Buffett invested in Japan? Well, there are 3 big things that jump out at me, and I think this is really interesting because all 3 of these things apply to people like you and me just as well as they apply to billionaires and hedge fund managers. Obviously, nobody except Warren Buffett and the team at Berkshire Hathaway actually know exactly what's in his head, so it kind of goes without saying, but I am just sharing my personal thoughts here. I would say the reason number 1 is because the US stock market has already risen so much, so that the valuations of many companies today seem quite inflated, and as a result, it's very difficult to find an undervalued company in the US market right now. Number 2, Japanese investments appear cheap based on their fundamentals, i.e. how much the companies are valued at versus how much money they actually make. Japanese companies today are valued much lower for every dollar they make compared to US companies. So much so that around the time of Buffett's announcement, 4 of the 5 trading houses were trading at 0.75 times book value or less. And number 3, we've talked a lot in the past about concerns around the US dollar and the Fed's plan to just continue printing money indefinitely. Well, by investing in foreign countries such as Japan, you are getting exposure to investments denominated in their currency. And that allows you to hedge against the risk of your currency losing in value. In fact, Buffett's 5 investments generate 1/5 of their net profits from commodities, which further hedges his risk against the dollar. So, with those 3 things in mind, should we invest in Japan or not? Well, if you've been following the channel for some time, you'll know that I'm a big fan on diversification. So, from that perspective, it's a pretty simple yes. But I think what's really more interesting than to simply say diversification is good is to maybe highlight a trend. Just last week, I shared a video on how Ray Dalio has been investing more and more in China in recent times. And now today, I'm discussing Buffett's recent investment into Japan. Is it a coincidence that 2 of the world's great investors are both looking to Asia for their investments? I don't believe that it is. I think it could perhaps be an indication that it could be good long-term value in the Asian markets. So if you are interested in learning more, have a read into more Japanese-specific investments. The largest ETF is the $10 billion iShares MSCI Japan. If, however, you're worried about the fact that investments are denominated in yen instead of dollars, well, the $1.5 billion Wisdom Tree Japan Hedged Equity ETF is interesting as it neutralizes the yen-dollar currency risk. Now, I've tried to highlight very specific points in this video so that you can go away and do some research for yourself. However, I do always go back to diversification as my preferred method of investing. And the key point that I would really highlight for this is it doesn't really matter if you think the US or Japanese stock market is headed higher, lower, or if it's going to trend sideways. Smart investors are humble enough to acknowledge that it's just too difficult to predict these things with accuracy, and as a result, diversifying investments across many different types of markets and many different countries is usually a good idea. I'd love to know what you think though. Do you agree with Buffett's approach? Are you bullish on the Japanese markets or not? Let me know in the comments, and before you go, don't forget to check out this video up here. Thank you for watching.